Welcome to Brokers Digest, a weekly webcast by the Hedge Singapore, where we discover stock opportunities with you. This episode is made possible by TD Ameritrade Singapore.
Welcome back to another episode of the Edge Singapore's Brokers Digest with me, Amala Balakrishna. Joining me today is Christopher Brankin, Chief Executive Officer of TD Ameritrade Singapore. Hi, Chris. It's been a while since we spoke.
Yeah. Good afternoon. Looking for lots of stuff on tap for this week. And our numbers keep improving from a coronavirus standpoint in Singapore. So I'm happy that I think we're still headed in the right direction to further reduce some of the restrictions that we have.
Yes, that's great. And we are happy to have you with us as well. So, Chris, in today's episode, we'll be looking into, or at least trying to look into the future on three futures, the S&P 500, gold, as well as oil. But first, let's take a step back and look at how the market performed in the last week. Stocks snapped out of a 3-day losing streak, with the Dow Jones Index rising 0.1% for the week to end at 28,606.31 points on Friday, 16th October. Similarly, the S&P 500 index edged up 0.2% from the previous week to close at 3,483.81 points, while the Nasdaq Composite rose 0.8% over the week to end at 11,671.56 points. Now, Chris, market watchers attribute these gains to stronger consumer sentiments. What are your thoughts on this?
Look, I think the U.S. consumer has been pretty resilient. It has been a very sentiment-driven market over the last 6 months. And I don't think that's going to change anytime soon. And so you have two things that the markets are very highly correlated to here currently. And one is that is which way the coronavirus is going. Are we starting to see continued improvements across Asia? Is there that concern of that second wave still coming for Europe and possibly the US? Those things that are really driving the overall sentiment of the market. Now, the secondary part of that is, are we going to get some government stimulus in the United States? Because, look, if we're talking about the consumer, if we run into this part where we are be able to add, some, stimulus to the economy directly through the consumer by receiving some type of stimulus payment, that would be nothing but positive for the, for the stock market here in the short term.
Right. So, Chris, you mentioned coronavirus and all these kind of things. So, the past few weeks have seen vacillating global vaccine prospects as well.
Yes.
And also you mentioned the rebound in the COVID cases in the US. So, how do you think markets have responded to these developments?
Well, look, it's really day to day. You have, there are some market watchers, there are the pundits that are on both sides of the camp. Are we going to get some type of, therapeutic or vaccine that is actually usable and distributable to the, the public around the globe at some type of speed that we've never seen before? We have 4 drugs that are kind of in their, testing trials. We have some kind of bumps along the road in some of those tests, and we have some that are still progressing along nicely. So it would be something that would definitely add a explosion, I guess, in terms of sentimental relief if we were able to get some type of vaccine that was starting to be distributed around the globe, because that is some of the things that where we see economic activity, especially across travel, food and beverage, across airlines, that has just been decimated over the last 6 months. And that is all part of that market sentiment. So I think as you look at it, this is very forefront and top of mind for many of our customers at TD Ameritrade and for investors around the globe, because I've said this for a long time, and it, almost like a broken record, so goes the coronavirus, so goes the markets, and really kind of so goes, the economies around the globe.
Right, Chris. As you were speaking, I was just thinking, like you mentioned, TD Ameritrade's clients as well as certain industries that you mentioned, like the aviation sector and the F&B sector. So I was just really thinking, and I wanted to ask, what are the top 3 counters that you see TD Ameritrade's clients trading in the past few weeks?
Sure. Yeah. I mean, so we do have an investor movement index, so something where we actually track what our customers, are trading, not only across the globe, but also what they're doing in Asia. Now, more specifically, from a global perspective, we see our customers, net new buying of some of the large giant names that have kind of gone through some splits. And that's Tesla, Apple, and then Amazon. And Amazon's an interesting one because, that's retail driven in terms of what their kind of base customer is. But they also have, all our types of, services that are helping provide to their bottom line in a growth they've never seen. More specifically, I think if you look at from what our Asian-based customers are buying, it's a little bit of a mix. You have Taiwan Semiconductor, which I think is an interesting one because that kind of, to me, kind of gives you an underlying health in terms of if we see the chip manufacturers starting to do well, I think that's where that demand comes from in terms of for the technology side of the economy. We have Square, which is an interesting, which is one that's been, kind of been around for a little while as a product, but we've seen, a lot of net new buys from our Asian-based clients. And then the last one, is kind of in that wild card space. We see ExxonMobil, has been one of the biggest net new buys for our Asian-based customers, over the last few weeks. Now, that one's interesting because that one I think is really directly correlated to what the U.S. markets are doing in terms of it's the energy markets are correlated to the stock market, which is correlated to, what's, the demand of, and what's happening with the coronavirus. So those are some what we see on the buy side. Now, it's not all buys. We have been net new buys, probably one of the most positive periods that we've had, especially over the last 4 months, have been net new buyers from all of our customers across TD Ameritrade. But from a sell side of things, it's no surprise. We see Uber and Delta as some of the biggest net new sold positions. And then we also see Twitter. Twitter's a little bit different. Maybe they kind of run into some kind of issues in terms of some of their privacy and some of their sharing types of models. But from Uber and Delta, that we see, across our total population. And then one of the big ones we see, sold from our Asian-based clients as well is Beyond Meats. So a little, kind of come off the positive spin of that company for a period of time. And it has been, one of our biggest net sold positions from our Asian-based clients over the last few weeks.
That's actually very, very interesting. I'm actually intrigued by the fact that last week, in our last week's episode, we saw that, some of the counters that you mentioned, Amazon, Tesla, and Apple were also the top few counters that TD Ameritrade's clients were trading in. And this week you mentioned some other interesting names like the Taiwan Semiconductor industry stocks as well as Beyond Meat. So it's quite interesting to see the moves that clients have been taking and the stocks that they have been interested in the past few weeks. Actually, against this backdrop, Chris, I'm curious to know how good of an investment product futures are. They seem to have been making the news in the past few weeks, especially following hopes of a vaccine. So why do you think this is so, Chris?
Sure. Look, let me give you a little explanation in terms of, what futures are really quick and what we see our customers here in Asia. So our customers in Asia, are very tech savvy in terms of the products that they're trading and the tools that are available to them. In fact, on the derivative space, so that's options and futures, we see, 75 to 80% of our trades from our Asian-based customers are through the derivative space. Now, there's some highlights in terms of why, we see that. And some of this to do with leverage, and some of it is to do with the time zone that we live in. And that's key to when we're talking about futures. So futures, basically, many of the products trade around the clock, 5 days a week. So from Monday morning here in Singapore all the way till Saturday morning here locally, you can trade futures products, and not only to hedge your portfolios, but also to take advantage of market opportunities as they present themselves. We saw this, last election cycle, as we went into the U.S. elections, overnight here in Singapore and across Asia, we saw markets moving at a tremendous rate, as the election period. Now, we think there's going to be some volatility heading into the November 3rd election again this year. And in order to be able to make sure that you are eligible to take advantage of those short-term opportunities, or to be able to hedge your either US or Asian based portfolios, you need to make sure that your account is eligible to trade futures. So whether you have an account with us or not, if you already have an account with us, and you need to make sure that it's eligible to trade futures, because there's a separate disclosures and risk agreements that you need to have. And if you are signing up for a new account, you need to make sure you sign up for the equity and the futures portion of the account. So just one thing that I really want to make clear is you make sure you are set up to be able to take advantage of that opportunity. Even if you don't think you're trading futures products right now, it doesn't cost you anything. There's no fees associated with it, just to be able to be ready if there was something that was driving the markets, whether it was the S&P 500, whether it was some of the larger futures products that our customers do trade. You want to make sure that you are ready to be able to trade those. Now, we see huge popularity in them, and because of the power that the futures actually unlock. It's a leverage type product, which means you actually put up a certain amount of margin requirement to control X number of contracts or exposure to that position. Now, they're all different. It's not like stock where you buy 100 shares of stock or you buy 10 shares of stock and you have that exposure to that stock. So you want to make sure that you understand the risks associated with any futures product that you may consider trading. It has all the different futures are listed on our website at the tdameritrade.com.sg, and it tells you what each contract is worth and what each move in that contract is worth in terms of real dollars and cents.
Oh, Chris, actually, you just took the words right out of my mouth. I was just about to ask you if you could explain how trading in futures differs from trading in, say, a stock in terms of the benefits and the exposure it brings. But I think based on the explanation that you just gave, I think if I was someone who is sitting on the fence deciding whether or not to trade in a future, I think that explanation just bought me and just told me that it's something that I should be doing since it's just very easy to just sign up for an account.
Amala, just to kind of highlight another key part about futures trading.
Sure.
So I think a lot of people in the region might be familiar with CFDs. So
Right.
futures, unlike CFDs, actually trade on centralized exchange. So you have less liquidity risk because the products are there's more liquidity. There's no hidden fees. There's no risk in terms of being with a certain market maker. So it's all on a centralized exchange that has defined risk, it has defined contracts, has defined expirations. Is something that is really important in terms of getting in and out of positions, especially in times of stress or volatility.
So, Chris, actually, what are the most popular futures trades amongst TD Ameritrade's customers?
Sure. So it's, no surprise, our customers in Asia are the exact same as in the US in terms of the number one traded futures product. So the number one futures traded product is the E-mini S&P 500. Wow. So essentially trades 23 hours and 15 minutes a day, which allows you to be able to either hedge your portfolios across Asia, across Europe, across the US, or take advantage of short-term opportunities that might present themselves, whether it's from a Trump tweet or it's from an economic event or it's from a political event that happens anywhere across the globe. So the S&P 500, month after month is always our number one most traded future, and it's the largest traded future, across the globe as well. Some of the things when we might see a little bit of difference in terms of popularity, we have the S&P 500 is number one.
So, Chris, I just want to stop you right there.
Sure.
Just want to ask you over here, we have the chart right here, and we see that the index has been increasing quite a lot lately. So does this mean that this is what our viewers should continue to be putting their money in?
Well, so this is a great chart. So you got the S&P 500, which has made record highs this year. But interesting, it's really driven based on what the tech sectors have been doing. If you look at it from a broad-based perspective, the S&P 500, more than 50% of the stocks in the S&P 500 this year are actually down on the year. So are we getting to that point where do we see some type of secular rotation into some of the value types of sectors in the S&P 500? And a lot of that is really correlated in terms of the demand being generated or being kind of depressed from the economic activity or lack thereof activity caused by the COVID-19 period we've had over the last kind of, all of 2020, more or less. So that is something that I think as you look at some of these further out charts in terms of what is the trend that we see, and then what do we see compared to some other futures products or sectors in the economy.
Right, right. So you say other futures products. So right now we have a chart on gold futures. So Chris, what should investors be looking out for if they wish to buy gold futures?
Yeah, so look, this is an interesting chart. Now, normally gold, would be seen as a quote unquote, flight to safety or potential, hedge or protection if you have worries about downside risk. Now, you've seen gold is essentially kind of slowly trended higher, since, beginning of the year. So around 1500 to up, kind of the levels that it's at right now, near that 2000 level. So that's a little bit different to, it seems to be more directly correlated to where the S&P 500 is going, rather than being a flight to safety. So that, I think, ties into the point that I brought up just a few minutes ago, is it's not all 11 sectors in the S&P 500. It's really been a technology driven. We have the consumer, which makes up, almost 3/4 of the U.S. GDP, that it has been, sidelined, so to speak. We have certain sectors in the economy, whether it's transportation, food and beverage, hotels, that have been significantly impacted because of the lack of demand and travel around the globe. So I think that's something as where people have been positioning themselves to keep some gold in their portfolio as a hedge, that if we do see some increased volatility and some type of sell-off, based on further economic downtrends, across Asia, Europe, or the U.S., gold has always been seen as a good hedge to have something to, kind of in your overall portfolio if we do see some downside risk.
Right, Chris. Yes, as you mentioned, we always hear that gold is like a safe haven asset. So thank you so much for that explanation that you just shared with us. So lastly, let's just take a look at a chart on oil futures. I feel that oil is a tricky commodity to invest in given how volatile prices can be. So what do you say, Chris?
Look, gold, oil, up until, the collapse that you see on the chart in front of you there, in that, April, time frame, was probably, our top 2 or 3 traded futures product on a month over month basis. We saw, unprecedented move in oil that actually saw the oil futures price go to negative, which has never happened. And if you'd have told, an analyst who would have told you that, 18 months ago, you would have thought the person was crazy. But, it was a real thing, real pricing and based on the market conditions that were, there at the time. So we have seen a little bit of reduction in some of our oil, trading futures, from that period, but we have seen them start to come back online as some of the front month oil contracts are starting to trade again more actively. But we do see our customers, across the sector have been participating, and that is through, the big energy companies, the service provider stocks. And some of these have been at such depressed levels that we've seen yields on some of these stocks. Like we talked about earlier, one of the biggest net new buys from our customers across Asia has been ExxonMobil. So ExxonMobil's yield is around 10%. So if you believe that they're going to keep their dividend, at the levels that they're at right now, and there's potential for market upside on that product, it makes it for an interesting idea, which we do see a lot of activity, especially on the buy side for the last month from our customers across Asia. So you're right. I think the oil market is definitely a very interesting part right now, Mala, and it is really correlated to what's going on around the globe, not only tied to the coronavirus, but also in terms of what, the stock markets are doing. Because if you pull up, the S&P 500 and overlay what the oil futures are doing on top of that, you will see that as oil dropped, you saw the stock market fell off at that point. And as we recovered, we've come back, and oil futures are kind of at back to levels that are, near to where they were in that March timeframe. And the big thing going forward is if you believe that we're going to continue to see economies around the world start to open back up and we get demand back for oil, that is something that would positively impact the underlying. If you don't believe that and you're on the other side of that coin, then this might be an area where you're looking to be shorting some of these positions as a corollary type of event to what's going on around the globe.
Well said, Chris. Wow, I think I've learned so much about the three futures just from this conversation. So, with that, we have come to the end of this week's Brokers Digest. Thank you, Chris, for your comments on the markets as well as your pointers on the three futures. To our viewers, we hope these strategies help you in your investment decisions during this uncertain market outlook. To know more about futures, you can visit TD Ameritrade's Education Center or the Investing 101 page on the Edge Singapore website. Do like us on Facebook and Instagram to be alerted on next week's episode, which will be on the 26th of October. We will be discussing more investment tips that you won't want to miss. If you have any questions or topics which you'd like for us to discuss, do leave them in the comment section below. I'm Amala Balakrishna. With me is Chris, and we'll see you again next week. Take care. Goodbye.
Thank you.